Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with his good friends, the three amigos. How you doing, Dion?
Howdy, I'm doing great. Ready for round two.
And Matt, how are you?
Taking a page out of Powell's book. I'm ready to break some stuff.
Yeah, there we go. There you go. Just break some stuff, see what happens. So I don't know if you guys saw it this morning. I will bring up the article momentarily. I want to kind of summarize what I took from it. But the real estate slowdown is real. I'm right again. Existing home sales are down. Right again. Prices are up. Right again. And I want to say you have not seen anything yet. So let me summarize what was in the article, kind of what I took away, and then I will actually bring up the article so we can go through it together. So first and foremost, existing home sales are down. They are down 2.4% month on month, 5.9% year on year. We are now at a rate of 5.61. If you follow my channel, you know that I believe we will be down 25% this year. We did 6.3 existing home sales last year. So we are already down 700K on our way. So more than 10% already. Inventory is still a problem. Has somebody heard me talk about the move up buyer and supply destruction? Again, I am right. We are 10. Yeah, stop it. We are at 1.03 million. We are 10% below last year. Again, these are things I've been telling you and I've been ridiculed for. So I was right. What else to tell you? Oh, housing prices. All these people talking about crashes. Housing prices were up at a record $391,200, which is a whopping 14.8% increase from last year. Again, no crash. All cash offers made up 25% of the market. They are not interest rate sensitive. 17% of all purchases were investors. And if you're one of mine, you're writing great deals. It doesn't matter. 28% of purchases were first-time home buyers, where it normally is 40%. First-time home buyers are getting crushed because there is no inventory because the move-up buyer is not selling and not trading up. I went through an example with Matt, the mortgage guy, where his payment would go up 300%. Yeah. Everything I'm calling for is happening. And, oh, by the way, you have not seen anything yet because it is going to get, these numbers will get worse. Inventory will go up. Days on market will go up. Prices will not crash. All these things I've been telling you are happening right now, are only going to get worse. We'll go to you first, Dion. What do you think of all that?
I think two things are going to make articles like this get a lot of views, a lot of eyes on ads. Mm-hmm. First, we're going to start seeing a blended conversation where they talk about mortgage applications crash 50%, because they're going to go, we're down 5 or 10% on new mortgages, but refinances are 80% down. And when you look at those, are all mortgage applications. They're not going to clarify it in their statement. They're just going to say mortgage apps are down 50%. Obviously, it's a crash. Well, of course, you're not going to refinance when rates are 2 or 3 times what they were when you refinanced last year into those record low rates, or the year before.
Exactly.
Which most of us did.
Yeah.
I did. Like half my portfolio got refinanced.
I told everybody to do that. Right. Or we told everybody to do that.
And the second thing is they're going to talk about price reductions.
Yeah.
And when someone is projecting growth at this almost hockey stick type level of the last 2 years compared to the last 10, and you don't go with your wish price, and you think, well, it's still 10% above last year, but it's not 40 like I was hoping for. I'm reducing it this amount. That's not a price reduction.
Well, it is a price reduction, but it's not value destruction. Yes.
Right. It's more like a correction in their estimated value of their property than, right, because it's still above last year.
Yeah, a price cut. This is what drives people crazy. Michael, I'm seeing price cuts everywhere. I'm like, okay, a wish price cut doesn't matter. I want to see sales. And again, sales price up 14.8% from last year. It's crazy. Matt, what do you think from all that?
Yeah, I mean, obviously watch my market every day. And there was a quadplex that hit, and whoever posted that was taking hits because that number is absurd.
Right.
And he already did one price reduction, and he has the unenviable position of the only multifamily price reduction this year in my markets, all 3 of them.
Wish pricing.
Yep.
We're not, we're not that, like he did that a year ago. He might've got it.
A true story. Well, so a year ago, it probably would have been 100 less and he probably would have gotten it. But to your point, and this is what you and I talk about a lot, which is it's not actual destruction. It's not actual value destruction. It's still going to be up over what it sold for last year. It's just not going to be up as much. Like we've been saying for months, you're going to see fewer transactions. You're going to see a slowing of things, which we've seen.
Yeah.
But much like I've been calling for months and why I have all the dry powder I do and why I'm waiting for the summer, lumber is half what it was. Half. It's not a $10 2x4 anymore. I checked today, I can get it for $6.25. So it's essentially almost a 40% reduction over where it was. And I now actually have people that said, hey, my schedule's clearing up a little bit. Were you still looking at doing anything this summer? Yes, I was.
Yeah, it's funny.
You're gonna have to rework your quote.
Yeah, so it's funny. You and I did a roof calculation like 2 or 3 months ago, and it was 72 grand. I just approved the bid. Same roof, same building, same guy, 55 grand.
Yeah. Yep. We also saw one of the things I saw this morning too, and I was like, well, look at that. And so when I was doing my homework this morning, I took a look, and I've been telling you, yeah, $450 a square foot for the stuff that's been for the stuff that just got finished that's now to market. Well, there's another new neighborhood that's much to that caliber of neighborhood, 1,500 to 1,800 square foot homes, $350 a foot.
Yeah, it's coming.
So it's already come down. And so, yeah, I get it too. Like the whole idea of all these, not nearly as many permits. Do you know how many permits are out there that people pulled in the last 6 to 9 months and they didn't build because it was too expensive to build?
Yeah.
I'm not concerned about watching the fall in permits because there's an absolute ton of them out there that haven't been built yet.
Yeah, totally agree. So let me show the article, and just, again, what I want people to realize is we've all been calling this, and they're all these numbers I'm about to show you are about to get worse. So I don't want anybody to think we're already there. So let's just bring it up. So hopefully you guys can see that.
Not yet. Yes, I can.
Okay. So
oh, it's Diana.
Yeah, of course. It's Diana. So again, sales of previously owned homes in April fell to the lowest pace since COVID started. What I want you to, again, these are closed sales. So all three of us know this, but let's tell the audience. If you're closing in April, you signed in late February.
Probably, yeah.
Where were rates in February versus where they are today?
75 basis points lower.
Yeah, they were about 100 to 75 basis points lower.
Yep.
So again, we've had a run up, and this is, so again, April fell to the lowest level. Diana, it's going to get worse. So let's just be very, very clear. Lawrence June, moving back to pre-pandemic, he's basically saying skip 2020 and 2021. Lawrence, it's going to get worse. Prices, record price, 391, 200, 14.8%. We will not see a crash. This will go to single digits without question. It might even go to low single digits, but we will not see a national housing crash, and it's going to drive people crazy. Again, know your buy box, know your market. Every market is different. I'm talking national numbers here. So let's talk about this. Existing home sales declined 2.14% month on month, 5.9% year on year. It is going to get worse. These numbers in a month, or certainly two, these could be double digits. I'm telling you, these freaking sales declines are going to be, again, I'm calling for a 25% fall in crashes. So what is 6.3 times 25%? Let's do some real math real fast. 116,
right, basically 1575.
What did I say? 6.3, 6.3 times 0.75. So I think we are going to see something below 4.8 million sometime this year. Yeah. So if you're a real estate agent living on commission, second, get a side hustle. It's gonna be rough. Where's my cursor? There it is. Okay. So what else? And Dion, Matt, stop me anytime you want. I just want people to see all of this.
One of the things that was really interesting is, right, from a side hustle perspective, and this is, I was talking to an agent and she said to me, she said, what is the best thing that I can do right now? And I said, start doing rentals.
Mm.
Rentals aren't going to stop.
Like leasing.
Leasing. Yeah.
Yeah.
Start doing rentals.
That's what Graham Stephan did way back in the beginning.
Yep.
Leasing.
Start doing rentals. And she's like, well, okay. And I said, listen, at the 75% and the average units, $2,000, I said, you do 4 rentals and you're basically at the same place as you were if you sold a house.
Yeah, exactly.
And I said, is it going to take a little bit more work? Yeah, maybe. But how much work have you spent on the 20 buyers that didn't buy anything this year because they couldn't find what they needed or they kept on losing?
Yeah, this is all about surviving the next 2 years.
Absolutely. You got to be able to pivot. You
Get
have
to the other side. Yeah.
Yeah.
So interest rates last year were 3.66. They were 4.78. That's important because that's when these deals were locked. They're now 5.4. That's why all these numbers are going to get worse. It is and has always been payment, and payments are getting worse. Inventory at the end of April was 1.03, down 10.4%, which will drive people crazy. Again, we told you this was coming. Price we've already talked about. Again, now we're going to bifurcate the market. The low end fell 29%. The high end is up 16%. Again, K-shaped recovery, all these things we've talked about. Days on market, 17 days. Folks, we need to double, triple inventory. 17 days. I know a lot of you haven't been around for a while. This used to be 65 and 70 days.
Absolutely. Absolutely.
Yep. All cash buyers, 25%. Why is that important? Because we don't care about rate. Investors, 17%. If you're one of my students, you are only buying cash flow deals, so it doesn't matter. You just
real quick on 17%, investors are 17% of sales.
Mm-hmm.
I don't understand. I thought investors bought everything on the market.
That means 83% weren't investors. That's a very good catch.
Just checking. Yep.
28% first-time home buyers. Again, I told you this was a problem. It used to be the average is 40. That's because the move-up market, the Fed broke housing. When you are not selling your first-time home to move to the next one, the first-time home buyers have nothing to buy. It's tragic. What else do we got here? I think that was about it. So again, what I got to say is these numbers will make all the housing crash people go nuts. Dion, did you see something?
Well, no, I was going to say the thing that would really be frustrating is if somebody for the last 2 years watched all the channels that were screaming crash. You don't have to pay rent. Don't ever buy. You all of these reasons why the crash was absolutely imminent. Imagine how much they lost out on. Not only 2 years of this appreciation that we've seen, where it's literally in the hundreds of thousands of dollars, even if you just own a couple of properties. So people that are watching hopefully have been listening and knowing that there's not a crash for the last 2 years, we're buying. And now have 30-year fixed rate debt under 4%, some under 3% on rentals, where rents might go flat for the next 5 years, which is what I like to always project for flat rents, right? When I'm buying, that's what I count on. But as rates go up, as costs go up, area average rents might rise just based on needs of owners. Look at the benefit to the person who has the fixed rate debt on a rental now.
Yeah, exactly. That's why I told people the people that won the 1970s bought a house in 70 or 71. You had low interest rates of the decade, and you had fixed debt for the decade, and rents more than doubled. I want to ask you, what year was the lowest rates in 2020? 2020. They were a little bit higher in 2021. They're going to go higher from here. Where do you think rents will be at the end of the decade if you bought in 2020? Could they possibly double? Yes. Yeah. Who won the decade? The people that bought in 2020.
Mike, they're not going to win a decade. They're going to win 2 decades or 3.
Exactly.
2 or 3. At that point, their house isn't just an asset. At that point, their debt is an asset.
Exactly. That's why
their debt's an asset at that point. 2.75 debt. Are you joking? That's why I think that, again, 2, 3, and 4 unit small multifamily in the next, now to the next, 3, 4 years is going to be the best asset in most markets, best performing in most markets, because people are still not going to be able to afford that single family. They're going to finally acquiesce and get into a multifamily and be like, I'm so glad I couldn't buy that single family in many cases. And the second thing that I think that's also going to happen is sub 2 is going to be the best and most important skill set to have, based on the value of that debt in the next 10 years, like think about the position that people are in. If we actually go into a heavy recession, or even worse, a double dip recession, that debt at 2.5% versus 7%, it doesn't matter what the cost of the house was.
Yeah, exactly.
It largely doesn't matter because people buy on payment.
Exactly. So folks, again, housing slowdown is real. Affordability is a problem. Transactions are going to crater. These are all things that we've been talking about for months now. They are happening. Unfortunately, national housing prices won't crash. There may be a couple of markets that have unique characteristics that it could happen. Always know your buy box in your market, know your thing. Yeah. So Dion, what do you think about all this, and where can people find you?
So my wrap up thought
Yep.
is, with the data, we can have a fairly effective crystal ball. And here's what you should do as an investor, looking into your crystal ball for the next year. Know your market, know what's average, watch what's happening to rents. Don't look at what the listing prices are, because that's the number that matters. That's the number that matters to the seller that made them think it's worth selling. Make offers that make sense to you on numbers that get you the yield you're looking for on enough of those properties, because as properties sit on the MLS longer and longer, as days on market increase, you just need to find, not all of them, just the motivated seller in your market that needs to sell, that's more interested in your ability to close than their ability to get the price that they made up when they listed it.
Exactly.
And you can find me right here on YouTube, Dion Talk Financial Freedom.
Any closing thoughts, Matt? Where can people find you?
Yeah, so I think that there's going to be an acceleration of things, of this market happening. And so what I believe will happen is I think rates will continue to climb higher. I think it will eventually, start to bite on the housing number, on the actual sales, not volume of sales, but the actual price. I think we start to see price reduction, maybe end of this year, maybe beginning of next, but we certainly start to see price reduction. And people are going to have probably a window of maybe 3 to 6 months where they can buy with a ridiculous rate, probably 6s, maybe even nuts at 7. The numbers work at that number, even with what you're buying it for. And then if Dion's deflation story comes true by the end of the year, we have 4% rates and you're refining from a 7 to a 4. And now you've just done nothing but create a massive pocket of margin.
Yeah, I want to be very clear on something. Even if Dion's right on theme, but wrong on timing, that's still an amazing thing, right? If you are writing great deals that the cost of capital is 7, and heaven forbid, you've got it's 30-year debt. If you're one of my only 30-year debt, let's just be wild and say the recession doesn't come till 2025. You're paying 7%, 7%, 7%. And then the recession happens and the Fed racks rate and you can refi in 2020. Who cares? If it cash flows today, is a great deal today with a cost of money of 7. There will be a time in the next 20 years where there is a recession and you will be able to refi at 4% or 5%.
Likely.
It'll happen.
Yeah. So far, very likely. Yeah.
Well, I mean, in the next 2 decades, I feel fairly confident that might happen.
And that's the thing is I agree with that. I think that with what we're seeing, the velocity of everything, I think it could be very short term, like even just like a window, like the end of next year, beginning of 24, like a window where you see something like that. The possibilities there. But again, none of it matters, because interest rate doesn't matter if you're just doing the math and saying, this gives me the return I need. 30-year fixed rate debt, period, end of story. Lumberjack Landlord on YouTube and Instagram.
Thanks, guys.